Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capitals. Welcome to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure, and as well as we'll discuss the two stocks which is the high potential to outperform in the upcoming series. So without any further ado, let's start with the video. So this is the Nifty 50 weekly time frame chart. So in this chart, we're observing Nifty has been currently forming a low top, low bottom series from the top, which has been made on Jan 2026. From there, Nifty has been continuing forming a low top series, and it's been trading below its key psychological level as well as the key short-term moving averages and mid-term moving averages level as well. So near-term structure seems to be on a weaker end. If you look at on the daily scale, Nifty has been consolidating it for the 5 consecutive days now. To at a higher scale, it has been getting a resistance at 23,800 to 23,850 zone, while at a lower scale, 23,400 to 23,200 has been acting as a strong cushion area for the Nifty index. So Nifty has been currently in a range bound scenario, but it's been sustaining below its key 20-day exponential moving average, which is a short-term daily moving average. We define short-term trend would be cautious as of now. Till then, Nifty is not taking breaking out above the level of 23,850 for the consistently two trading sessions and maintaining a higher high formation. If you look at the overall daily scale, sentiment remains neutral. So buy Nifty above the level of 23,850. Target price would be around 24,000 and 24,200. And at a lower scale, we have to maintain the SL level at the level of 23,550 level. Coming to the Bank Nifty index, the Bank Nifty index is also maintaining a low top, low bottom series and it's been sustaining below its rising channel bottom trend line that defines the overall upward structure of the Bank Nifty has been violated. And Bank Nifty is also sustaining below its key psychological level as well as the short-term moving averages that define the trend structure seems to be on a weaker end. On the daily scale, Bank Nifty has been sustaining below its 20 and 12-day exponential moving average that defines the near-term structure has also been getting weakening. At a higher scale, 54,500 to 55,000 level would be a resistance mark, and a lower scale, 53,000 to 52,000 level would be a strong base level for the Bank Nifty index. Short Bank Nifty below the level of 52,500 with a stop loss to maintain at the level of 52,650 level and target would be at 52,000 and 51,500 level. If you look at the overall stocks to watch out for the upcoming series, which has a high potential to outperform, which has been showing a high relative strength in the current market scenario. In the first case, which is at Lloyd's Metal. So this is the weekly scale of Lloyd's metal chart. So if you look at the on the April month, it has been given a breakout of its strong consolidation phase, which has been adjoined from Jan 2025, and it's been maintaining a rising structure and supporting its key 5-week average level as well. On the current week, from the 5-week level average, stock has witnessed a strong rebound from these levels, and on the daily scale, it has been witnessed a bullish mean revision from its 20-day exponential moving average. So it defines on the near-term structure, stock has been outperforming the benchmark index and it's likely to outperform in going forward series level as well. With the current market price, we can enter with a target price of 1860 and 1920 level with a stop loss to maintain at the level of 1640, which is the swing low as of bullish mean reversion. Second stock that we have been shortlisted for the bullish momentum for the upcoming series would be SAIL, which is Steel Authority of India. So if you look at the monthly scale of Steel Authority of India, on the April month, stock has witnessed the breakout of its multi-year level, which has been adjoined from 2007. And the current one, which is a May month, has been showcasing a follow-up buying, which is forming in high and higher lows formation on the daily scale, as well as on the weekly and monthly scale. But it defines the multi-time frame structure as it's been on the positive undertone. On the weekly scale, stock has also been sustaining about its key short-term moving averages of 12, 20, and 50-week exponential moving level, average level as well. And the momentum indicators are also turned on the positive front. The volume participation has also increased as if you look at the current week volume has been surged above its 20-week average volume. So overall, the breakout has been backed by volume and the momentum. Current market price is around 200. We can set a target at 220 and 225 with a stop loss to maintain at the level of 185 level for the effective risk management. So these are the two stocks that can focus for the upcoming series to get an outperformance in our portfolio.